Namaste and a very enthusiastic welcome back traders. What a fantastic rally we saw in Nifty and Sensex. Yesterday was a blockbuster session for the Indian equity markets. Defying the somewhat indecisive mood in the global indices, our domestic benchmarks witnessed a massive surge, painting the entire sectoral landscape in green. Let's dive into the details of this impressive rally. The Indian indices showed remarkable strength yesterday, delivering significant gains that propelled them to the new heights. Let's take a look at the impressive numbers. The Nifty 50 index closed at a strong 25,062 levels, registering a substantial gain of 395 points, translating to an impressive 1.6% surge. It touched 25,000 yesterday for the very first time in 2025 year. So we are expected to see a good uh, rebound from here on, maybe in the upcoming days. Sensex as well ended the day at a robust 82,530 levels, rallying by a significant 1200 points, marking a notable increase of 1.48%. This strong performance showcases the underlying bullish sentiment in the Indian market. What's truly remarkable about yesterday's rally is the participation was quite broad-based. Every single sector closed in the green, indicating strong buying interest across the board. The realty and auto sectors were at the forefront of yesterday's rally, both registering strong gains of 1.92%. This could be attributed to positive demand trends, favorable policy updates, and renewed investor confidence in these growth-oriented sectors. Metals also displayed significant strength and it climbed by a healthy 1.74%. Positive global commodity prices and strong domestic demand could be the reason why there was an upward movement yesterday in all the metal stocks. Consumption sector as well witnessed robust buying interest, gaining 1.52%. This reflects positive consumer sentiment and strong spending patterns. The IT sector, a key driver of the Indian market, also closed in the green with the gains of 1.16%. Positive global tech cues and renewed investor interest was the reason behind this move. Even the typically defensive pharma sector participated in this rally, closing with a gain of 0.79%, indicating strong broad-based positive sentiment. Now let's look at the global markets, which presented a more indecisive picture with indices showing mixed movements across different regions. On Asian markets, we saw a varied response. Japan's Nikkei closed lower by 0.88%, and both Hang Seng and Shanghai Composite also ended in the negative territory, down by 0.79% and 0.68% respectively. This suggests some caution or profit taking in the Asian markets. European markets generally closed in the positive territory, although the gains were not substantial in all the indices. Germany's DAX was up by 0.65%, UK's FTSE gained 0.57%, and France CAC saw a modest increase of 0.21%. Overnight in the US, the markets also showed a mixed performance. The Dow Jones closed higher by 0.65% and the S&P 500 also ended in positive territory, up by 0.41%. However, the tech-heavy Nasdaq Composite bucked the trend and closed slightly lower by 0.18%. Now finally, let's examine the commodity markets, which appeared to be largely sidelined yesterday. WTI crude oil experienced a slide of 2.17%, trading at $61.78 per barrel. This could be due to concerns about demand or increased supply. Both precious metals saw notable declines yesterday. Gold dropped by a significant 2,130 points or rupees, closing at around 93,930 rupees per 10 grams. And silver also fell by around 900 points or rupees, closing at 97,000 rupees per kilogram. This could indicate investors moving away from the safe haven assets amid the strong equity rally in India. Now let's quickly look from the perspective of indices and the open interest. Now if you see, so yesterday was a significant up move that we had seen. A strong green candle suggests that this strong candle suggests that from the lower levels there was a significant rally or buying interest that was seen. In fact, it was quite surprising that we discussed yesterday in the video that we would be expecting either a gap up or opening at the same level, and from there on we could see a significant up move expected. However, to our surprise, the markets opened slightly negative yesterday, or maybe it had opened at the same levels as of previous day's close, and then it significantly had fallen down, indicating that there is a panic sell-off. But then there was a sudden buying that emerged, and it sustained for some time, and then from there on we saw a significant up move that had come in the markets. It did not even give a single opportunity for the short sellers to exit. Because of that panic selling from the call writers, it had further propelled the Nifty to move beyond 25,000 odd levels. So as we had discussed in our previous day's video, that we would be immediately crossing towards the previous resistance levels of 25,200 once we immediately close above 24,800 odd levels. And in fact, yes, in yesterday's session we saw the significant up move that had come in, and we closed above 25,000 odd levels first time in 2025. So this seems to be a very strong candle. Now this has opened for the further up move in Nifty, and we might approach easily towards 25,800 just by the end of this weekly expiry is what we are anticipating. If there could be a range bound kind of scenario, then we will trade in between the range of 25,600 odd levels to 24,800 odd levels. So this would be the range. But looking at the kind of strong positive momentum that we had seen yesterday, today as well we are expecting the gap up opening, and then the strong gap up should sustain. So if that sustains today, then easily we would cross 25,300, 400 and 500 levels in the coming days. And then for us the immediate stop loss should be 24,800 odd levels, and below that it should be 24,400 or 500 odd levels, from where we saw this significant up move coming in. So it's a very clear trade on the long side to continue. And then if there is a selling pressure that comes in below 24,800 odd levels, we should start selling. And once that approaches 24,400, then it's a negative territory for Nifty. But for the short term, maybe we would not be expecting any such kind of move coming in. Now let's see from the perspective of open interest. So since it is the first day of open interest for the 22nd May expiry, that is when we may not see significant open interest built up happening. However, we already see on the far away strikes, we saw significant open interest positions that got built up. Like on 26,000 odd levels, 50% of open interest was built up. Similarly, 25,500, we saw roughly around 40% of open interest built up. And at every 100 points beyond 25,000 odd levels, we see significant open interest that got built up. At the same time, at the lower levels below 25,000 odd levels, we see strong support coming in from the put writers, and more than 60% of open interest built up was done alone yesterday. And since these picture indicates a strong support from the put writers at the lower levels from 24,000 to 25, there is very difficulty for Nifty to further claw back towards these levels. So we might see consolidation for maybe a day or two, not maybe today, maybe tomorrow, and then we could further move ahead towards the up move beyond 24,500 odd levels. So since there was a significant up move that we had seen yesterday, the buyers would want to continue this momentum for at least 2 to 3 days. So that is when we could see continued buying coming in from their end for significant 2 to 3 days. Now, looking from the perspective of PCR, it stands at 1, which is quite bullish. At the money, it is 0.69 because we do not see any significant open interest built up here. But yes, overall from the chart perspective, Nifty has turned quite bullish, and this bullish momentum is expected to stay and continue from here on. Looking at the Sensex has also crossed the previous significant resistance what we had seen in the last 2-3 days of trading session. Now the next up move for Sensex would be at approaching towards the 84,000 odd levels, from where we significantly saw the selling pressure that had come in. So it is just 1500 points away, and looking at the kind of momentum that we had seen, it is quite easy for Sensex to approach towards 83,000 and above levels just in the weekly expiry that we are anticipating next Tuesday. So the trades from here on is only going to be on the long side on Sensex, because at the lower levels we saw a significant buying interest that had come up today at 81,000 odd levels, and there was a massive 2,500 points run up that we had seen. So whenever you see such kind of moves coming in, this would continue for at least 2 to 3 days, and it would throw away all the sellers who have been shorting the markets, and then once they are out, maybe we could see some consolidation coming in the Sensex. So for now, on the higher side, we are approaching towards 84,000 odd levels. The crucial support zone for us is going to be 82,000 levels on the first tranche. If we see Sensex falling below 82,000, we have to remain cautious. And if it closes or approaches towards 81,000, then all the longs should be cut off and we should move on to the shorts. So 81,000 remains the crucial support for us in terms of a decider whether it is a long or a short trade. So as of now, it is just green and long for Sensex. Moving on to open interest positions. So surprisingly on open interest, despite we have expiry on 20th May Tuesday, so at the higher levels we still see significant open interest positions that got built up on Sensex. So as you could see at the money 82,500. In fact, yesterday we, despite there have been good open interest positions built by the put writers, which acts as a strong support. We also see roughly around 70% of open interest built up on the call side, and even at the every 500 strike at 83,000, 83,500, and then 84,000, we see massive open interest from the call side getting built up. So this suggests there is some pessimism that the call writers are anticipating. However, similarly at the put side, because there was a significant up move, now we had seen a good support being coming in from the put writers at every 500 levels, which was not previously, and this was owned, or lot of good built up was seen from the call writers. Now we could see that all getting unwound. So this suggests that we are headed towards the up move. But looking at these open interest build-ups, maybe on Sensex, we might see some consolidation or calm despite the significant movement. Let's see how it is expected to open today and trade. The closing remains very crucial. If it closes at least 300 to 400 points beyond yesterday's close, then it triggers a sharp up move further for the next week. On the PCR front, overall it is 1.4, which is very significant and positive, and at the money it is 0.80. Even that seems to be bullish. Now on the Bank Nifty, compared to Nifty and Sensex, we did see a good momentum coming in on the Bank Nifty. However, it was not that strong compared to Nifty and Sensex. So we have exactly closed onto the previous days high. So now the expectation is we should significantly close higher today, beyond yesterday's close or last 2-3 days close. So if that happens, then we are headed towards 56,000, 56,500 in the coming days. And as per our analysis, the anticipation is the next leg of up move should come in the banking stocks, and that would be the decider for the Nifty to head towards 26,000 odd levels. So we have been seeing a good strong support in the banking stocks, but that support has to be sustained today, and if that happens, then we will open for the next leg of up move in Bank Nifty, and easily could cross 57,000 odd levels by the end of this monthly expiry. On the support side, the first trigger for us should be these levels, 54,800 odd levels, from where we saw a significant turning point or a decider on the long move. If Bank Nifty again comes back to these levels, then we have to remain cautious, and if we close below 54,800, then that should be the trigger for us to liquidate the long positions and take sideways or short positions in the coming days. But yes, with the kind of strong momentum that we had seen in almost all the indices, as well as the major indices like Sensex and Nifty, there is very little anticipation that we might see any kind of sell-off coming at the higher levels. So for us, it is only the long trades that should be prevailing from here on. Now let's see from the perspective of open interest. So 55,000 has been very strong support on Bank Nifty from a long time, and this support had held despite Bank Nifty closed below 55,000 odd levels. So that in itself had suggested that the buyers are long, and they are not looking from the short term perspective. Rather, towards the end of May, they are expecting a significant gains to make. So if this kind of rally continues, then we are open towards moving ahead to approach 57,000 odd levels in just another 2 weeks from here on. So at the higher levels, we already see significant put writing being built up. So at every 200-300 points up move, we will see significant support coming in from the put writers that would act as a strength in the Bank Nifty, and then we might not see a further significant sell off because of the strong support which is lent from the put writers. So if that happens, then we could see a significant unwinding at all the higher levels on the call side, that will propel further for the Bank Nifty for the next up move. On the PCR front, it is 0 0.9, which is strong and positive. At the money is also 0.93, which is significant. On the financial services or FINNIFTY, again we saw a positive uptick here as well, but then it has to close decisively above the 26,500 odd levels. So we have closed at the same level where the FINNIFTY had closed the previous 2-3 days, and from there we saw a sell off, but then yesterday's significant up move could be the decider for FINNIFTY for the next 52-week high. So we are just 300 points away to close beyond the 52-week high. So the anticipation is by the end of this monthly expiry, we should be approaching towards 27,000 odd levels in FINNIFTY. And if that sustains, if 26,800 level sustains from where we saw a significant down move, then we are headed towards 27,500 very soon. So financial services and banking stocks would be the driver from here on for the next up move in the Nifty. Overall, the strong support what we had seen at these levels should act as the trigger for us for the short positions to take up. So 26,200 odd levels should be somewhere we should keep our stop losses for the long positions, and if that happens and triggers, then we should take short positions from here on. Now from the perspective of open interest, so as you could see at the lower levels on all the call side, we see unwinding that had happened, but then there have been no significant uptake or additions in the open interest at 26,000 levels on the put writing side. However, at the money open interest positions have got increased. So 26,500 levels we see some put writing additions, and at all the higher levels of 100 points we see some built up that is seen on the put writing. On the call side, some selling pressure has come up already, which suggests that we are just 500 points away 27,000 levels, and this could be easily achieved provided if this positive momentum what we have seen yesterday continues for next 1 to 2 days. So we are in a clean long up move, and this rally could continue and open up the new levels on FinNifty in the coming days. On the PCR front, it is 0.8, which is positive, and at the money is also 0.9, which is significant. Lastly, the FII and DII data, where the interesting moves or the analysis can be made for the further anticipation as to how the indices are expected to move. On the FII side, they are short, slightly short on index futures with 13,000 contracts. On stock futures, they are continuing their bullish biasness, and further 1 lakh open interest positions got added, and net holdings is 19.1 lakh contracts on the stock futures. On the call options, they have been long with 1.85 lakh contracts. However, on the put options, they have also been long with 2.03 lakh contracts, which suggests that they are not taking decisive positions on the index options. Rather, this is being driven by the stock futures. So as you could see, stock futures have been heavily added. So overall net on index options, it is 18,000 contracts short from the FII's end. On the proprietary traders, they are short on index futures for 18,200 odd contracts. On stock futures, they mildly hold 2.14 lakh contracts. In fact, they have unwinded certain long positions on stock futures. On call options, they have held long with 57,000 odd contracts, and on put options, they have shorted 45,000 contracts. So proprietary traders have been the biggest winners yesterday. They had been long, and in fact, they are still continuing to hold 1.3 lakh contracts on the long side. And if we see the up move coming in even today, and if that sustains, that means the proprietary traders have been bagging the good money from this up move in the markets. On the client or retailer side, on index futures, they have turned in fact um, still holding 1000 contracts on the long side. On the stock futures, they are continuing to hold 16.6 lakh contracts on the long side. On call options, massively shorts have been taken for 2.42 lakh contracts. And in fact, the retail traders would have been the biggest losers yesterday in the strong up move. And still they have, been holding some positions on the short side on the calls. On put options, they have again been short for 2.04 lakh contracts. That means they are expecting a kind of consolidation zone where on the net position they are holding short of 38,000 odd contracts. So it is the proprietary traders who are driving this market, looking at the kind of index option positions that we have seen. Uh, and on the stock futures, it is the FIIs who have been driving this particular rally. From the perspective of cash market investments, DIIs have liquidated 1,668 crores of positions in the cash market. However, that had been roughly around uh, 3.5 times backed by the FIIs, and they have in fact held 55,393 crores of investments in the cash market yesterday. So yesterday's up move that was seen was typically because of huge buying from the FIIs, both in the index stock futures, both in the stock futures from the FII side, and then long on the index options from the proprietary traders. And then good significant buying in the cash market had propelled yesterday's markets, and this is expected to continue even today and maybe for the next week. So overall, if we have to summarize, yesterday's session was typically a testament to the underlying strength and positive sentiment prevailing in our markets, despite the indecisive move in the global indices and a decline on the commodities side. So domestic benchmarks witnessed a broad-based buying and a significant rally, with all the sectors contributing to the gains. So the anticipation is even today we should see a significant sustenance happening at the higher levels. If we continue with that, even the next week we could expect the positive opening. So that's it from our side. Let us know, have you been long in the markets? If not, this is the right time for you to turn long. Share your insights and observations in the comments below if you benefited from this market analysis. Please give this video a thumbs up and subscribe to our channel for daily market updates, and hit the notification bell to stay informed. Trade wisely, and we will see you in the next video. Thank you.